Hello everyone, my name is Ram Dhamija. Welcome to my channel. Today is the weekend of 22nd, 23rd November, and it has been an interesting week for Nifty. There has been upward movement, downward movement. At one point in time, it looked like India-US trade deal is going to get announced. On the other, it looked like markets are going to break down with the Bitcoin problem and crypto problem having, in the world right now. And then finally, the week ended with Friday with one shocker which no one actually expected, which was the rupee collapsing beyond 89 and closing at about 89.6 to a US dollar. So it's been quite a action-packed week, and there are a lot of repercussions going ahead into next week. Not to say the other internals of the market like open interest, etc., have been wildly fluctuating from 0.7, 0.8 to 1.5 on the upside. So market has been all over the place. The VIX has been increasing. And there was Nvidia results on the international stage that happened, and of course there's the Russia-Ukraine peace deal that has been announced. So there are a lot of things that have happened, and things are moving at a very, very rapid pace, and so have been the market. So there has been a lot of action that has happened in the market. So I'm going to take you through all the action and what is going to be the next week's outlook for the markets, and where I see the markets headed to. So I'm going to take you through all of that in the next 10-15 minutes. So let's begin today's video with how the markets are positioned right now. So we will start off with first with the Nifty chart. This is the Nifty 3-minute chart. As you can see that on Friday we made a W pattern, reverse M pattern, whatever you might want to call it, and finally we closed down at 26,058. That was also because of the reason that the world markets were very, very volatile, and one day before that there was a sudden drop in the Nasdaq and Dow and S&P, and that drop was basically led by Bitcoin. So Bitcoin started crashing now from a top high made of 126,000 US dollars. It crashed to 80,500 US dollars. So that's like almost a 30-40% drop just in a matter of within 1 month. And if you see the last 1 year returns also, Bitcoin, it has gone into negative. So that asset class is kind of unraveling itself, and that is having a issue in terms of the contagion effect is happening in terms of the tech stock. So what happened in US was that there was very good results by Nvidia, and Nvidia stock went up after the results, but immediately after that it came down also. So even after such good results, the stock prices are not sustaining, and that led to a correction in Nasdaq. And of course, crypto was correcting, which was adding to the pressure. So all these things combined have had an impact that the US markets have gone down. And because of that, you saw on Friday there was pressure on terms of our market as well. Now let us look at how the 1-day chart for Nifty is looking. And this is more interesting because you can see that we have been maintaining the higher high, higher low pattern. And as I had said earlier many times also, we are going to consolidate. So this is the consolidation up and down that is happening. It might happen for some more days, some more weeks, and then finally we should be breaking out of this. Now also what has happened is because of this currency collapse that has happened, we have now crossed 89 to a dollar. Now even if we make an all-time high, compared to dollar term return, it will still be lesser because our currency keeps on falling. Last year it fell by 6%. This year already it has fallen. So any return that you get in dollar terms are negated by the currency impact. So that is a huge problem for us, that the currency is weak, and now it is almost approaching 90 to a dollar. And if this continues, then your returns in dollar terms at least are going to be substandard. So in rupee term, let's say if your markets still go up, in terms of dollars, you would still not have made that kind of return. So let's say if Nifty went up by, let's say, 10% during last 1 year, 6% of those returns are gone because your currency is weakened by 6%. So you just made 4% actually if you talk in terms of any of the international currencies. And this is where your global diversification comes in. This is where your asset allocation comes into the picture. If you don't have global assets in your portfolio, if you don't have gold in your portfolio, because gold is again a currency and an inflation hedge both, then you're losing out on a lot of returns. And hence I say that asset allocation is the most important thing in your portfolio. If you don't have that, you should have it. You should have all asset classes in your portfolio. The percentage of those asset classes can vary, depending on what stage of life you are in, what are your goals, immediate needs and so on and so forth. But having all these assets is very, very important. And before I proceed, couple of things. If anyone is interested in making their mutual fund portfolio, I help people build their mutual fund portfolio, very strong, robust portfolios which take into account all these variations, which take into account the volatility of the market and diversification in terms of the asset classes. So I take personal interest in making all these portfolios. So if anyone is interested to get their portfolios either evaluated or made, again, both of these things are free of cost, then they can fill up the Google form, which is in the description below, and leave their contact details, and I shall get in touch with you, and then we'll have a discussion and review your portfolio, and then take steps accordingly how to optimize the returns, best risk adjusted returns. And the second thing, of course, is please subscribe to the channel if you already haven't. Yeah, so now coming back to the importance of asset allocation, it is very, very important, because if your home currency is weakening, then even if your markets are giving you decent returns in actual purchasing power terms, let's say when if you have interest outside India, or your purchasing power actually slows down, let's say even if you're buying things which are made in dollars, like for example iPhone or whatever be it may, those things are going to get more expensive simply because your currency has weakened. So the real wealth can also only be created if you're diversified across all asset classes. So gold, why is gold shining? Because gold has got an inherent advantage of 3 to 4% depreciation every year, irrespective of the price that is determined in dollars, simply because the rupee goes down against the dollar. So as I said, gold is an important asset to have. International stocks are important. Fixed income little bit is important. Equities, of course. Within equities, what should be the allocation between small, mid, large? What should be the allocation between value, alpha, quality? Lots of questions. So it is best to take the advice of people who are into this full time and understand these things, so that your portfolio is optimized. Now let us look at the other important things that is happening. So this was the Nifty chart. Now in terms of the Nifty DMAs, as you can see over here, Nifty 200 DMA is comfortably placed at much below at 24,500. So that has got no risk of breaking. So, and also the 20 and 50 are rightly positioned. So 20 is above the 50. So till that time, we are above 20 and 50. There's no worry at all. In fact, even 20 DMA is almost 25,800 odd. So even that is not challenged at this point in time. So we are going to see some consolidation happening, and once this consolidation is over, then hopefully our market should move up higher. In terms of the open interest is now evenly matched at about 17 crore calls versus 16 crore puts. So it's at 0.96. It was at 1.4 at one point in time, but then the selling came in on Friday. But as we speak, Friday Gift Nifty closed up because US markets actually recovered a lot, so that has become all okay. So Monday we can see, hopefully we shall see some movement. And also another peculiar thing that is happening is that irrespective of the movement in the world markets, our markets are not going down. Why are markets not going down? Is because our markets have been flat for last 1 year, whereas all these world markets are given 20-30% returns. So now when they are correcting, our markets are not correcting, which is a fair sign, because this is how things even out. Like emerging markets basket, we are underperforming even emerging market baskets by almost 25 percentage points. So emerging markets are also gone up. Developed markets have gone up. Every market has gone up except our market. So last 1 year has been tough for our markets, but this is the exact time to make your portfolio, because when our markets start to perform, maybe the other markets are in the correction phase, or they are in the consolidation phase. So you can get that kind of outperformance from our market if you make the portfolios right now. Now let us look at the other important things. This is how the last 1 month performance has been for all the indices. So Nifty VIX has gone up, though it is still at 10.67, which is less, but S&P VIX was also up. I remember it had crossed 25, but VIX went up in the last 1 month. And the other things that have done well is infrastructure. IT is making some sort of a comeback. Banking has done 1%, so it is also okay. The ones that have not done well, small cap is corrected 3%, so that's a big one. See, this is what is going to happen if the valuations are slightly elevated. No matter what you say, small cap is still trading at about 26, 27, or maybe 28 times forward. Mid cap is trading 27, 28 times forward. Nifty is 22 times. So the thing is that if the valuations are very, very stretched, I won't say they're very stretched, but they're not less also, then you are not going to get a clean breakout coming in. Now in 2023 March, small cap was trading at some 20 PE. That was the right mix, from 20 it went to almost 38, 39 PE to in the peak of September 24. So this is what happens if the valuations are in your zone, if they are giving you that tailwind, then you get abnormal returns. But when valuations are high, then you get substandard returns, and valuations when they're okay, then you get normal returns. So right now valuations are okay, and that is where you're seeing sometimes the markets go up, sometimes it'll go down, and so on and so forth. It's not a screaming buy, but it is nonetheless a buy, simply because we have had a time correction for last 1 year going on. Now let's look at one of the most important things, which is the FII data. Now FIIs have sold about 13,000 crores this year. I would actually say this is kind of flat for them, so this is not too much, because they are when they start selling, they sell 40-50. So maybe there is a kind of a exhaustion that is coming in the FII selling. So they have just sold 13,800 crores. DIIs have bought 54,000 crores, so which is good news for us. So even if you see in the previous months, FIIs had sold 47,000 crore, 46,000 crore, 35,000 crores, and that is why our market was struggling to go up. October they did not sell, and our markets actually went up. In November they have sold little, so our markets are kind of within that same zone. Also, if you look at in terms of the FII shorts that they are created, they have been piling onto their shorts. So they are now at 1.7 lakh shorts. When the market was going up, their shorts had covered. Now their shorts are slightly high at 1.7 lakh contracts short. So that is something that we need to be watchful for, because if the shorts actually build up, then two things can happen. One is that the short, if the markets still continue to go up, then there'll be a short covering, or if they have built up the shorts, then they will try to get the market down. So that is another thing that we need to watch out for. So right now the market is not looking like it will run away until, of course, some external trigger comes in. There are two triggers that we can look forward to. One is the India-US trade deal. If that happens, 3-4% straight up market will go without warning anyone, nothing. It will just be a gap up and it will sustain like that, just like it happened during the previous time when the war ended and so on. The second thing is maybe Russia-Ukraine, if some peace treaty is signed, that will also have some impact on the global market, though the impact might not be to the tune of 3-4%, but a couple of percentage points that should be also give a fillip. The other thing that is if crypto situation kind of improves, because that is a major problem. I'll talk about it, but that's a major problem. It can have a contagion effect on the world market, especially US tech stocks, which are widely correlated with crypto going up and down. So that can have a problem. So if that gets resolved, that could be another sentimental positive. Now this is something that I've talked about. So this is the USD INR chart. You can see over here on Friday how USD immediately at 215, it was trading at about 88.7, and then it just shot up to 89.6. 1 rupee movement in such a short time is huge for the currency market. It typically doesn't happen. And if this kind of movement is actually happening, then this is very peculiar and it's not very good. And if you see how much we have lost in last 1 year, we have lost 6% against the US dollar in 1 year, and last 5 years we lost 20%. So on an average 3 to 4% is what you can actually factor in, that the loss of the currency happens. And I've already told you 2 ways to protect yourself: international stocks, international debt, which is unfortunately not available now, or gold. These are the 3 things that you can look at in terms of hedging your portfolio internationally. Now let us look at the international cues, how they are placed. So on Friday, there has been some recovery in Nasdaq. As you can see, Dow is up 1%, and Nasdaq went up by about 0.7%. S&P went up by 0.7%. So there has been some recovery after the brutal fall that happened. And the US 10-year and 30-year are down, which is good. So US 10-year is down to 4 now, and US 30-year is to 4.7. So this is good news, and this possibly gives way for some rate cut, though the December rate cut has been kind of nullified, wherein it doesn't look like that's going to happen. But the bond yields going down are good. US dollar index has crossed 100, which is not good, because that indicates that there is some stress in the dollar. Brent oil is at 62, which is good for us, because anything below 80 is good. And gold is holding on above 4,000. It is at 4080. Silver futures have gone below 50, but silver spot, as you can see, this is above 50. So there is again a backwardation that has come in, wherein the spot is higher than the future. And Bitcoin is right now trading at 84,700. It went to 80,822, as you can see over here, the low for the day, 85,000 high for the day. So it's a complete no for me as an asset class to invest in. And this is what the chart looks like. If you are seeing over here, last 1 day negative, 1 week negative 11%, last 1 month negative 21%, last 6 months negative 24%, last 1 year negative 14%. So how, I don't know how can anyone invest in such an asset class which falls 30-40%, within like 1 month. This is from 122, it is now at 84 within 1 month's time. So I would be very, very careful. If I were you, I would not invest in it, and I would not recommend anyone to invest in it. So coming back to the markets are looking okay. There is nothing to worry. There is some slight things like FII selling which are happening, which need to be controlled a bit. Once they are controlled, and once some good news comes like India-US trade deal, then our markets can go up. There will be slight upward pressure, downward pressure on the market depending on how the global cues are. The global cues have become tricky now. And keep an eye out on this Bitcoin thing. If this implodes or if this goes down, then it has the potential to take a lot of things down with it. So one has to be just careful in that, how you are placed if something happens over there. Whether you have quality in your portfolio, whether you have gold in your portfolio. If you have all those things, then you will be very well insulated. But if not, then it is time maybe to plan your portfolio in a better way. Seek some advice. As I have said, if you want my advice, you can contact me, and then make your portfolio robust in a way that no particular storm is able to deviate your portfolio path too much. So that's it from me now. That was my update for today. I hope you liked it. If you did, please do subscribe to my channel. Please like, share, comment. I like reading your comments, and I shall see you soon with another update. Till then, take care. Bye bye.